Hello, everyone. Welcome to Small Business Insider Live, a weekly live stream program hosted by the Small Business and Entrepreneurship Council, specifically for business owners, entrepreneurs, and anyone who supports small business. My name is Christy Arslan, and I am SB Council's entrepreneur in residence and a small business owner. And I'm coming to you today from Alexandria, Virginia. Joining me is Barbara Weltman. Barbara is an author, has written quite a number of books. One includes J.K. Lasser's Small Business Taxes, and she's also a small business expert and does a lot to advocate for small businesses. Barbara, thanks so much for joining us.
Oh, it's a pleasure to join you, especially at this time of the year.
Yeah, so obviously it's an important time of the year for small business. It's tax time. It's something every small business owner dreads just a little bit in trying to get together all of their taxes, see where they stand. And I think the one question on every small business owner's mind is, how do we properly comply with the tax code but minimize our tax burden? Obviously, our goal is to boost the bottom line of our business, and we want to make sure we can get the most out of taxes in terms of every deduction that we should be able to take. And so my first question for you is, as a tax and small business expert, any recommendations you have on last minute tax tips for small businesses?
Well, just to add to what you said, not only do we want to minimize our taxes and save as much money as we can, but we also want to sleep well at night and make sure that we're doing the right thing and we're not raising eyebrows at the IRS. So one of the things that to be sure to know is we're coming up on the tax deadlines, and some of them are new this year. So for calendar year entities that are partnerships and limited liability companies, in the past they had the same deadline as individuals, but this year they have a March 15th deadline, just like S corporations. Flip side of that is that C corporations used to file March 15th. Now they have until the same date as individuals, which this year happens to be April 18th. So we have a couple of extra days there. The point to note is that regardless of the entity or the type of return you're filing, if for any reason you can't file on time, just ask for a filing extension. You'll avoid late filing penalties, and you'll have more time to file and more time to get your act together. I know for businesses, let's say this is your busiest time of the year, it's kind of hard to run your business and also gather your paperwork for your CPA. So that's one thing that I think is important to make sure that you watch those deadlines. The other is that there are still some last minute things you could do to cut your tax bill for 2016. So for example, if you are profitable and you already set up a qualified retirement plan, you signed the paperwork by the end of 2016, you have until the extended due date of your return to add the money for 2016 contributions. If you didn't sign the paperwork, it's still not too late, because you can actually set up and fund a SEP plan for your business, whether you're incorporated, unincorporated, self-employed, however it is. And you again have until the extended due date of the return to add contributions. The catch here, though, is of course you have to make contributions on behalf of eligible employees. One last thing here is that if you had a high deductible health plan in 2016, I used to be able to say it was the kind of bronze plan on the marketplace, but it doesn't really align exactly with the bronze plan. But that kind of plan, high deductible catastrophic coverage, then you can put money into a health savings account, and the deadline for an individual to do that is April 18th, regardless of whether you get a filing extension.
Oh, great. Now, one of the things that I think a lot of business owners want to know, as you know, the tax code is ever changing. Congress is always making changes. But are there any new regulations or reporting requirements that businesses should be aware of as they file this year?
Well, yeah, as you point out, things never stay the same, and we are kind of in a time of flux, because some rules are sort of in suspension with the new administration, so we're not clear. But we do know certain tax rules that are new for 2016 returns that may be helpful to you. So, for example, if you hired certain workers There's a new targeted group that will entitle you to a work opportunity credit that is long-term unemployed. So check whether you added those kinds of people to your payroll and did the appropriate paperwork at the time of hiring. Also, for businesses that did research, increasing research expenses, especially for startups. There's a new break this year. So you have a research credit, and you can use that credit to reduce your tax bill dollar for dollar. But many businesses are just starting out. They don't even have expenses. So they don't have revenue. They don't have taxes. You can use the research credit if you're a small business to offset up to $250,000 of the Social Security portion of that the employer has to pay for FICA. The Social Security portion, that's the burden on the employer. So there's a tax break to be had there, and that's brand new for 2016 returns. Take a look at that. Check out the new mileage rate that applies if you use a personal vehicle for business driving, 54 cents a mile. A number of little numbers like that have changed.
Great. Now, one question I know for a lot of small businesses, when you start off small, as you say, you're starting off, you're responsible for everything, including handling your financials. And sometimes a lot of small business owners, especially the self-employed, will file their own taxes, especially pass-through entities. Any recommendations you have on when it's time you should get some help, when maybe you should get the help of a CPA in filing your taxes? Is there a specific point in the business when it's better to get an expert to help you?
Well, there's no one size fits all, but my answer to anybody is that what is your time worth, and what could you be doing better with your time? And I would say that's running your business and not doing your taxes, which I think you should leave to experts. It's vital that you as a small business owner understand taxes so that you can make tax sensitive decisions throughout the year, like, should you buy equipment or rent it, or should you hire an employee or use an independent contractor? So you have to understand the tax ramifications of your business decisions, and you can't be calling your CPA every minute. You'd run up a pretty big bill if you did that. But when it comes to tax preparation, certainly it might be money well spent to pay a professional to do it, or at least you should be able to get your records together and in good shape. You shouldn't be at the point where you're handing over a shoebox of receipts. You should have your finances organized with some software or cloud solution to track your accounting, all your income and expenses, and then just turn that over, and that will certainly save you money and keep you informed of what's going on in your business.
Well, I can say as a small business owner myself, my husband and I own a gourmet popcorn company, and one of the best expenses we have, money that's well worth it, is for our bookkeeper. It's a minimal cost, and we get great help at managing all of that paperwork that we're going to need, and managing all of our expenses, our vendors, all of our receipts. She helps us with, so that everything's ready to go, as well as she provides us with all of the great reporting that we need to help us make smart business decisions. So we couldn't do it without the help of our bookkeeper. So I definitely agree that that's an excellent expense, and then we appreciate all the work our accountant does, taking all that information and filing for us. So the money's worth our time. I agree with you there. Now, let's shift gears a little bit. So every year I hear about tax reform. Like every year we talk, our lawmakers talk about simplifying the tax code, which I think is critically important for business owners, so they could truly understand like what they need to comply with in their business. And then we also talk about, tax reform and tax breaks, and what we can do to help incentivize businesses and make our country more competitive again, our economy more competitive again. So yet again this year the issue of tax reform has been bubbling up. However, there's definitely a belief that this year, since we have a unique alignment where we have the same party both in the White House as in the Senate and House in Congress, that we may actually see some movement on this issue. And so I wanted to talk to you a little bit about your opinion on some of the tax reform proposals that are being put out there and highlight why tax reform is so critically important to small business and what proposals you think have elements that would really benefit small business.
Well, I want to point out one thing before delving into your question, which is that we have two major pieces of legislation moving ahead at the same time, both of which will make tax changes. One has to do with repeal and replace Obamacare, which is chock full of tax changes, and the other is the overall proposals for tax reform. I think we can't ignore that there are two things going on at the same time, both of which would make some very favorable changes. Now, look, we all like the idea of simplification and lower tax rates. So to the extent of simplification, one of the best proposals, and I think it's pretty, I don't think it's, but this one is disputed by too many people, is expensing of capital acquisitions. So if you buy a piece of machinery, you just write it off. We'll be done with depreciation rules. Right now, we do have a first-year expensing option, and in fact, it's worth noting that the dollar limit goes up for 2017, so you could factor that in to your estimated taxes, and that's the rule for 2017. But looking ahead, wouldn't it be great if you bought $600,000 of equipment and you just wrote it off, and you didn't have to keep track of depreciation year after year, and all the myriad rules that are entailed there. So that's one piece of simplification that I think, and it would certainly, I think, help spur the economy and incentivize investments in capital equipment. Obviously, the tax rates, that's the big debate. How to bring down the corporate tax rate, where we have the highest rate in the G20 countries, and it's time that the rate comes down, but it's not just the rate alone. It has to do with the whole regime, and we've been talking about things like border adjustment, and there are many other aspects that come into play, and how that will dovetail into the tax treatment for individuals, because as we know, almost all the businesses in the U.S., especially all of the small businesses, with some exceptions, are pass-through entities, meaning owners pay tax on their share of profits on their personal returns. So the individual income tax rates are critical. So do we want a corporate rate that's higher than the rate that an individual would pay? Well, they are talking about a breakout where business profits would be taxed at a different rate than perhaps other individual tax rates, which could go higher, let's say on interest income or something like that. I think that there isn't just one particular aspect of reform to think about. The question is, can they get it done, and when will it become effective? And the reason why that's important is we as business owners need to be able to plan. I mean, I'm working on my 2018 edition for 2017 taxes now. And I'm saying, is this rule going to apply? Is this rule going to be changed? And it becomes really challenging to know what's going to happen for 2017, or any rules going to change right away. For example, in the healthcare reform measure, the American Health Care Act that's been proposed, they want to repeal both of the additional Medicare taxes, the tax on earned income and the net investment income tax, starting in 2018. So that would certainly be a tax change that would put more money into business owners' pockets, presumably that they would have to reinvest in their businesses. Again, there's so many moving parts here. It's really hard to say, you know, what's the most important thing, but we have to keep our eye on everything, I think.
No, I agree. I know there's a lot of conversation, but I agree with your point that it is critically important to focus on both the corporate tax and individual income tax rates, because so many small businesses are pass-through entities. But, you know, business is a ecosystem, and so many small businesses do business with larger businesses. So we want a healthy ecosystem for the business community out there. And for our business, we're a pass-through entity, so having that individual income tax rate, deduction or changing it or decreasing that rate so that we get taxed differently on the money we bring in from our business would be a huge help in us helping to grow our business. I hear that they're moving pretty fast. They're looking at trying to, like, as you mentioned, doing almost two things at once, both healthcare reform and also tax reform, in regards to the timeline. Any thoughts on, you mentioned how certainty is so important. Do you think that they'll be able to pass something that is, a bill that corrects the issue permanently, or that we might be facing an issue where I know often in the past they've done rules where they've done a tax deduction or done some sort of tax reform and it's only for a year, or only for, like, expensing is the perfect example. They changed that, increased it, then it expires, and then we have to go through the process again. Any thoughts on that approach?
Well, it comes down to the budget and money and assumptions that are going to be made in terms of, look, the whole idea behind the tax cuts is to make as you suggested, make the economy healthy so that more people have jobs and more people will be paying taxes, and that will raise revenues even though the rates get cut. But so it just depends on assumptions that get made when they mark up these bills. And as you pointed out, so many provisions had been temporary. Some became permanent. Whether they'll still be permanent when they may disappear again. So permanent is kind of an illusory thing in the tax law anyway. Who knows? It would be my hope that they, remembering back to the '86 Act, when they were able to cut down numerous tax breaks just down to 2. It was a wonderful thing. We celebrated, but we only celebrated for a short time, and before you know it, we had 3 tax brackets, then 5 tax brackets. So it's hard to pin Congress down here. And to your point that we have a Republican Congress, both houses and the presidency, doesn't guarantee that all members are on board with this. One of the issues that always comes up with tax reform are representatives' key pet projects, things that benefit their state in particular, whether it's a farming issue or something like that. So wait till the lobbyists get involved. Just wait. It would be very difficult, I think, to get a pure bill out of Congress, something without any kind of special interests and such. But hopefully, overall, we'll have a good product.
Now, you mentioned, obviously, you recently did a piece for SB Council, and anyone watching is welcome to visit sbcouncil.org to take a look at Barbara's article that she recently prepared and shared with us on the health reform bill. I wonder if you have any insight on the healthcare tax credits, which is a large component of the new Obamacare replacement bill. Anything you can share about how they'll work?
Well, I understand the idea behind it, but my chief criticism of it is that it's so complicated. We're talking about trying to simplify the tax rules. This is the most complicated, age-based, income-based. You have to be, I think, a mathematician to figure out what kind of credit you'd be entitled to. With that said, I get the idea of why you would want to have a tax credit. I would hope that perhaps they could come up with an alternative way of underwriting people who have trouble paying for health coverage and making sure that everybody has access to and can get health coverage. That should be the #1 focus. One of the things I especially liked in the proposal was increasing the contribution limits for health savings accounts, because right now the limits are, what you can put in per year is about half of what the deductibles are under your plan. It's so silly. So the law, so it's sort of restores some reason to the situation by virtually doubling the contribution limits. Now, with that said, a lot of people wouldn't be able to afford to make those kinds of contributions. But again, maybe that's a place to consider subsidies for lower income individuals who would, like everybody else, have a high deductible, low cost health plan and then pay out of pocket up to the amount of the annual deductible amount from their accounts.
Got it. Got it. Now, as business owners, obviously, not many plan ahead. They're busy planning growth, but not necessarily planning what they should do in preparation to file their taxes for next year. So any recommendations you have for small businesses, what they could do this year to help, put them in the best position possible when they're about to file their taxes next year?
Well, I would say lesson learned. What happened to you this year? What did you find was the most troubling? I would say for most business owners, it's just the record keeping. For example, if you use your personal vehicle for business driving, you are required by law to have a log that shows the date, the mileage, the purpose, the destination, and such for each trip in your vehicle. You could do this on paper, or you can use an app that simplifies your record keeping. Either way, it's up to you to do it. And it really it is difficult, if not impossible, to try to go back and create these things, especially since they're supposed to be done contemporaneously. That's what the law says, contemporaneous. So it's that kind of thing where if you don't keep the right records, you could miss out on legitimate business expenses because you just can't claim them. And especially when you work with a CPA, they're going to ask for verification of certain expenses that you claim. You can't just say, oh, well, take off X dollars for business lunches. No, you have to have the proof to show that you are entitled to that. And so I think that record keeping is the number one thing. And then, of course, as we talked earlier, you need an accounting system to just track all of your income and expenses, separate everything out from personal, don't commingle anything, keep everything totally separate so it becomes easier. And really, as you point out, use a bookkeeper to help you, and the time that you put in it throughout the year will pay off dramatically when it comes to tax time next year.
Well, thank you, Barbara, so much. I was wondering if before we wrap this up, if you could highlight the books that you currently have and how they could help small business owners with some of their tax stuff. Sure.
For 2016 returns and 2017 tax planning, J.K. Lasser's Small Business Taxes 2017 is the book. And also J.K. Lasser's 1001 Deductions and Tax Breaks.
Thank you again, Barbara. We appreciate your time. And thank you for everybody for joining us for this edition of Small Business Insider Live. We host this live stream every Thursday at 1:30. So we hope that you be willing to join us. You can follow SB Council on Twitter at SB Council, and also like our Facebook page to keep up to date with our guests who are up and coming for this month. And again, consider joining SB Council and signing up to get our e-news, which will keep you up to date with all different small business policy items that are coming down the pike, and as well as tips for your business so you can be prepared at what might happen down the line, whether it comes to healthcare, access to capital, tax reform, and be in the best position to make decisions for your business. Thank you, everybody, for joining us. And thanks again, Barbara.